Good morning and welcome back, Dark Gamma community. It is Tuesday, June 9th, 2026, and we are coming in hot pre-market with the SP 500 sitting at 7,445. Already gapping up nearly 40 points above last night's close of 7,405. That puts us firmly in bullish territory to open. But here is the key tension we are watching all session. Max Pain is sitting up at 7,500, a full 55 points above current price. The market has gravity to pull toward, and that tug-of-war between momentum and Max Pain is going to define today's tape.
Exactly right, Samantha. That gap of about 39.5 points is meaningful because it opens us right at the very edge of the expected move range. Dark Gamma's expected move for today is plus or minus 44 points, giving us a band from 7,361 on the low end to 7,449 on the high end. Notice where we are right now, 7,445. We are essentially kissing the top of that expected move band at the open. That tells you the market is already pricing in maximum optimism for the day, and any buyers stepping in up here need to be disciplined.
That is a really critical point, Billy. When you gap into the upper boundary of the expected move, you have two scenarios on the table. Scenario 1, Gamma exposure flips supportive. The market holds this level and grinds toward Max Pain at 7,500, squeezing the shorts. Scenario 2, price stalls here. Sellers defend the top of the range, and we see a mean reversion back toward the middle of the band around 7,400. The open is going to tell us a lot about which story we are in today.
And the sector rotation is adding real color to this setup. Communications is the clear leader this morning, up 1.30%, dragging the magnificent 7 names along with it. Nvidia is leading the pack up over 1%, Tesla close behind up nearly 0.9%, Amazon and Meta also solidly green. The only real laggard in that group is Microsoft, essentially flat, down just a fraction. So the growth in tech complex is doing the heavy lifting this morning, which is consistent with a risk-on gap.
On the flip side, energy is the weakest sector this morning, down 0.6%. That divergence between communications leading and energy lagging tells you this is not a broad macro risk-on move. This is a very specific, technology and growth-driven bid. Traders should be careful about assuming everything is going up together. Rotation is happening in real time, and sectors outside of tech and communications may not participate the way the headline number suggests.
So pulling it all together for the Dark Gamma community, the bull case is a grind from current levels towards 7,500 through the session as Max Pain acts like a magnet. The bear case is a rejection right here at the top of the expected move, with price fading back towards 7,400 or lower. Watch implied volatility at the open. If it compresses quickly, that supports the grind higher. If it holds elevated, the market is telling you this gap may not hold.
Well said. Key levels burned into your screen for today. 7,449 is your upper expected move ceiling. 7,500 is Max Pain and your bull target. And 7,361 is where the bears take back control if things unravel. Stay sharp, size smart, and let price action confirm before you commit. That is your Dark Gamma pre-market brief for June 9th. We will see you at the open. On today's macro calendar, the main event is existing home sales at 10:0 a.m. Consensus 4 million, 50,000, previous 4 million, 20,000.
There is one more event during the session. These releases could drive volatility at the S&P 500 open.
Across the board, the Magnificent 7 are showing a broadly constructive tone pre-market, with 6 of the 7 names trading higher ahead of the open. The mood in megacap tech is cautiously optimistic, with gains spread fairly evenly across the group.
Nvidia is the clear standout, up just over 1% at $210.20, while Tesla is close behind with a gain of nearly 0.9% at $411.61. On the other end, Microsoft is essentially flat, down a fraction at $410.62, making it the lone laggard in an otherwise green tape.
Apple is also trailing the group with a gain of just 0.13%, So there's a noticeable divergence between the hardware-adjacent names and the AI-driven plays like NVIDIA. That spread tells us the market is still rewarding growth and compute exposure over consumer hardware today.
On the macro side, the Kuwait Petroleum Pipeline deal potentially raising around $7.5 billion is worth watching for energy sentiment, though it doesn't have a direct read-through to tech. The overall pre-market setup here is being driven by sector momentum rather than any single catalyst. Before we continue with today's analysis, we have a quick message for you.
Don't go anywhere.
Attention, we're running a special promotion. 25% off your Dark Gamma subscription. Use discount code DGI when you subscribe at wap.com/darkgamma.
This is your chance to access the most advanced institutional analysis on the market. Whale levels, real-time gamma exposure, institutional flow, and our daily pre-market analysis every morning. Don't miss out. Code DG, 25% off. We'll see you inside.
There's your invitation. I forgot to mention that both Billy and I are there with you in real time, with our AI analysis of unusual positioning and other key metrics.
That's right. See you there. Now let's get into today's earnings.
Earnings are stacked this morning, and the headliner pre-market is J.M. Smucker, a $10.9 billion consumer defensive name with a beta of negative 0.14 and an expected move of 3.3%, meaning the market is pricing in very little volatility from a stock that actually tends to move opposite the broader tape.
That negative beta is the standout detail here. If the SP 500 is under any pressure today, Smucker could actually catch a bid regardless of its print, and with open interest likely clustered tight around the expected move, gamma exposure near the strikes may keep any reaction contained.
Also reporting pre-market are SailPoint at an 8.5% expected move and Uranium Energy at 7.1%, both carrying significantly higher betas in the 1.7 and 2.6 range respectively. So watch those for more reactive price action.
After the close tonight, the focus shifts to Casey's General Stores, the largest of the evening names at $27.8 billion with an expected move of 4.1% and a low beta of 0.36, while Cracker Barrel and Bark round out the session with Bark carrying an extraordinary beta above 10.
The Kuwait Petroleum Pipeline deal catching my eye this morning, potentially raising around $7.5 billion, which could add a modest bid to energy names at the open. Crude positioning may shift as traders price in longer-term supply infrastructure implications.
Agreed, but the direct SP 500 impact looks limited unless we see a broader energy sector rotation that lifts the energy weighting meaningfully. Watch open interest on energy ETF options for any early gamma exposure buildup that signals institutional conviction.
The Iran domestic incident reads as low-level noise with no material commodity disruption flagged, so I would not expect any geopolitical risk premium to bleed into oil futures at the open. The pipeline story is the cleaner catalyst to trade around today.
With 0 days to expiration flow likely concentrated on the SP 500, any energy-driven gap-up could get faded quickly if the broader tape lacks follow-through volume in the first 30 minutes. I would stay nimble and watch how open interest evolves on the energy majors through the morning session.
Let's look at today's IPOs. Going public today, Whitehawk Income Corp.
An IPO is when a private company sells shares to the public for the first time. These events can be extremely volatile, especially in the first trading sessions.
Check the offer price and the available float. Day one moves can be very wide, size accordingly, and manage risk carefully. Digging into today's SP 500 open interest picture, the 7,500 call stands out as the nearest resistance with 9,434 contracts and a nearly 75% overnight surge in open interest. That strike also aligns perfectly with Max Payne, making it a compelling magnet for price into the close.
On the put side, the 7,300 strike is the nearest downside anchor with 8,020 contracts. But the real alarm is a 441% day-over-day jump in open interest there. Fresh put buying of that magnitude suggests traders are actively hedging a breakdown below current spot.
The 7,200 put adds to that concern with an even more dramatic 1,164% open interest increase, signaling layered defensive positioning just beneath 7,300. Between those two strikes, you have a zone of concentrated gamma exposure that could accelerate selling if spot drifts lower.
With calls piling in at 7,500 and puts stacking aggressively at 7,300 and 7,200, the market is effectively pricing a range between those levels as the near-term battlefield. The put-to-call ratio above 1.4 across all three expiries confirms the overall posture skews defensive heading into today's session.
Starting with the gamma flip at 7,471.6, this is the price level where dealer gamma exposure shifts from positive to negative, meaning below it dealers sell into weakness and above it they buy into strength. Since the SP 500 spot is sitting at 7,445.3, we are currently below the flip, which puts us in negative gamma territory.
That negative gamma environment tends to amplify moves, so any dip could accelerate quickly and any rally could get fuel added to it as dealers hedge their 0 days to expiration books. The call wall at 7,500 acts as a ceiling where massive call open interest creates dealer selling pressure, capping upside.
On the downside, the put wall at 7,375 is where heavy put open interest flips dealer behavior into buying, essentially acting as a support magnet or floor for today's session. So the implied range the market is telegraphing is roughly 7,375 to 7,500.
The key number to watch at the open is that gamma flip at 7,471.6. A reclaim of that level could stabilize price action and reduce volatility, while continued rejection keeps the session choppy and directionally unpredictable.
Let's move to the ICT analysis of the S&P 500 on the daily time frame. Price is at 7,406 points. We can see the market structure with swing highs and swing lows marked. The trend shows highs and lows that define the market direction.
Now let's look at the fair value gaps. These zones represent institutional imbalances, areas where price moved too quickly without covering the full range. These are points of interest where price may return before continuing its move.
We also identify the order blocks. Active ones show with greater intensity, while mitigated ones appear more faded. These blocks mark the last opposing candles before a strong directional move, zones where institutions left pending orders.
Finally, the liquidity zones. The BSL marks where buy stops accumulate, and the SSL where sell stops rest. The equilibrium line divides the range into premium and discount zones. Remember, the best long entries are in discount and short entries in premium.
Tracking institutional footprints. The dominant liquidity level over the past year is the 7,532 level, above current price, with maximum liquidity concentration over 6 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,399 level, below current price, with maximum liquidity concentration over 2 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,445, below the gamma flip at 7,472.
1 sigma range, 68% probability, goes from 7,362 to 7,450. 2 sigma, 95%, extends from 7,317 to 7,494.
On the GX side, call wall sits at 7,500 structural resistance. Put wall at 7,375 is where dealers become forced buyers.
The top institutional whale levels nearby are 7,000, 457, and 7,399. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking flow data from the institutional scanner this session. 12 large contract entries were flagged, and the premium totals are significant. Leading the board is Taiwan Semiconductor, with a call position at the 480 strike expiring August 21, 2026, carrying $39.2 million in premium and over 17,200 new contracts in open interest, executed at 96.2% of ask. Right behind it, NVIDIA logged a call at the 255 strike for September 26, 2026, $22.88 million in premium, nearly 31,000 new contracts, and a striking 98% of ask execution. That is about as aggressive as institutional prints get.
And the semiconductor theme does not stop there. Samantha. Meta Platforms adds a technology flavor from the social side, with a $700 call for August 21, 2026, $13.91 million in premium, and 89.3% of ask. But the session also produced a notable counterpoint. NVIDIA drew a put position at the 190 strike, same August 21st expiration, $9.35 million in premium, though executed at 66.5% of ask, which is considerably softer than the call side prints we are seeing across the tape.
On the confirmation side, 2 previously detected contracts are now showing open interest growth of 20% or more. NVIDIA's 220 call expiring June 12, 2026 added 12,197 contracts with $6.73 million in premium. And Nokia's $20 call for July 17, 2026 confirmed 7,859 new contracts at $2.49 million. Nokia is an outlier here in telecom, but the rest of the confirmed and new flow is concentrated heavily in semiconductors and mega-cap technology.
To summarize the directional picture, of the 12 new institutional entries flagged today, the overwhelming majority are call positions, with NVIDIA appearing on both sides as the most active single ticker in the scanner. Premium weighted, the call side dominates by a wide margin, and as percentage execution on the call prints is running between 89 and 98%, which indicates urgency on the upside positioning. The put print on NVIDIA at 190 is present, but at a lower ask percentage it reads more as a defined risk hedge than a directional conviction trade. Semiconductor and large cap tech are clearly where institutional flow is concentrating this session.
Breaking from the dark gamma scanner this hour. A top institutional contract has been flagged as a new entry today on Taiwan Semiconductor Manufacturing Company, ticker TSM. The contract in focus is a call option with a strike price of $480, set to expire on August 21, 2026. Total premium registered on this flow comes in at $39.2 million, placing this firmly in large-scale institutional territory.
That is a significant flow, Samantha. Looking at the volume and pricing data attached to this contract, the scanner registered 18,090 contracts at the time of detection. The institutional entry price, meaning the average premium paid per contract, was logged at $21.67. Open interest currently sits at 17,790 contracts, with 17,229 of those classified as new, indicating this position was largely opened fresh today.
Now here is what the scanner flags as particularly notable on the setup side, Philly. The current contract price is trading at $21.43, which places it below the institutional entry price of $21.67. In tracking methodology, when the current contract price is at or below the original institutional entry and open interest remains flat or growing rather than declining, that is what analysts refer to as an ideal tracking setup. It suggests the position has not been exited and the contracts are still being held at or near cost basis.
And rounding out the data picture, the underlying break-even price for this contract at expiration is calculated at $501.70 per share of TSM. That represents the price level at which the underlying stock would need to be trading by August 21st, 2026 for this contract position to reach break-even at expiration based on the premium paid. We will continue monitoring this flow as the dark gamma scanner tracks any updates to open interest and contract pricing. I am Billy alongside Samantha, and this has been Dark Gamma Financial News.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.